and I am your host here at Financial Markets. This is Smart 24. Remember, we are on channel 394 on GoTV. That is for those of you who have GoTV decoders, and as well we stream live on YouTube and Facebook at Smart 24 TV. You can always follow me on my Twitter handle at Anthony Sebs, and as well you can follow Smart TV at Smart 24 on Twitter, so we can have conversations on matters that are concerning financial markets here in Uganda and in East Africa as a region. Now, talking about matters concerning East Africa, we have a story from Tanzania as Tanzania's economy feels the heat from the Ukrainian war. Now, Bank of Tanzania said that most prices of commodities, save for Robusta coffee, increased during the quarter year-on-year compared to March 2021. Prices of agricultural commodities increased from December 2021 due to persistent supply chain disruptions that increasing demand for food from neighbors. And inflation, which stood at 3.6% in March 2021, rose from 4.4% in December to 6.3% in March this year, as the wholesale prices of a number of basic food crops went up by significant percentages. Now, Tanzania has admitted that its current account is hurting after it registered a deficit of over 1.31 billion US dollars in the first 3 months of 2022, compared with 354 million US dollars it recorded in the corresponding period last year. Now, according to Bank of Tanzania, this is due to the steady increase in the import bill, particularly for refined white petroleum products, signaling how supplies to the region have been hurt by the Ukraine invasion. Now, the external sector has been affected by challenges associated with the Russia-Ukraine war, coupled with the residual effects of the COVID-19 global pandemic. That is according to Bank of Tanzania in its 2022 Q1 report released on the May 16th. Now, the import bill and the rising debt also meant that the country spent more than it earned, and total national debt rose a further 399.8 million US dollars from December to 37.84 billion US dollars by the end of March 2022. That is quite a significant increase in debt. You can imagine from 399.8 million US dollars to, by the end of last year December, to now 37.84 billion US dollars. That is a whopping increase in debt right there for Tanzania. Now, with the external debt alone, the external debt accounting for over 28.35 million by March. According to Bank of Tanzania, the central government's share of the debt increased by 125.6 million US dollars during the quarter, whereas public corporations' debt remained almost the same, and private sector external debt slightly decreased. Now, external loans received during the past 4 months mounted to over 478.5 million US dollars against 154.7 million US dollars spent on debt service payments. Now, the domestic debt stock stood at about 21.78 trillion Tanzanian shillings, which is about 9.43 billion US dollars by the end of March, an increase of about 656.7 Tanzania shillings, 0.7 billion Tanzanian shillings, which is about 284 million US dollars from December 2021. Now, Bank of Tanzania said most of the price commodities, save for Robusta coffee, increased during this quarter. The prices of crude oil as well and white petroleum products edged up, escalated by the ongoing war in the wake of already persistent supply bottlenecks and gold price rises, owing to the waning risk appetite of investors prior to the war, Bank of Tanzania said in its report. It further explained that prices of agricultural commodities increased from December 2021 due to persistent supply disruptions, increasing the demand for food from neighboring countries and low or delayed short rain seasons harvests. Food inflation, which stood at 3.6 in March 2021, rose to 4.4% in December, and now by the end of March, food inflation in Tanzania was at about 6.3%. So, according to this report, Uganda is not alone in the inflation, pit. Many countries are sinking in inflation, and Tanzania is not an exception. And unfortunately, for the inflation is on food, meaning it is now expensive to buy food in Tanzania. At least in Uganda, okay, yes, inflation has affected food as well in Uganda, but not as much as it has affected petroleum products like soap, like cooking oil, and fuel, and all these other petroleum, related products. But in Tanzania, the food has actually, inflation in food, in terms of food, has gone way past 6 at about 6.3. Remember, in Uganda, inflation today is standing at about 4.9 and tending towards 5%, according to Bank of Uganda. That is the average inflation in Uganda. So I think Tanzania is now going way over, and we should at least prepare for the worst if at all we are to survive some of these things that are coming up. But according to Bank of Tanzania, food stocks in the country remained satisfactory during the quarter despite rise in food prices. Domestic fuel prices also recorded steep rises year on year between March 2021 and March 2022. The price of petrol rose by 30.8%, and diesel rose by 30.1%, and kerosene rose by 20.2%. An upward risk on food and energy inflation will continue to persist as a result of increasing pressures on food and oil prices from several fronts. The Bank of Tanzania quarterly report predicted putting pressures on the government officials to cushion the ordinary people, at least to get ready for what's coming. Now, last week, Tanzania said a subsidy on fuel will be launched from June 1st to alleviate pump price pain. But the officials said may have to borrow from lenders, which could suggest more debt. Now, that is the situation in Tanzania right there. A little bit confusing, a little bit hard, just like here in Uganda. So this story shows us that in the story of inflation, we are not alone in Uganda, and probably we are not the worst. We are not doing the worst. So we should manage our finances very, very carefully, especially around this time as inflation hits the entire world. Even countries like America and in European countries have experienced this due to very many factors. Recovery from COVID, the Russian and Ukrainian war. These have put a lot of pressure on the few resources that we have, and so due to high demand and low supply, we have sharp price increases all over the story, all over the world. That is a story we will be following up. I don't know how inflation is affecting you, but you can share with us on our social media and tell us how inflation has affected you or your business or your loved ones, and what you think can be done as well. That is what we shall be following up later on in the day. Now, moving on to other stories that have been making headlines. Crypto market meltdown linked to sell-offs triggered by inflation. Now, with the price of Bitcoin, the largest and most popular cryptocurrency, falling by over 50% since November 2021, crypto traders are now counting cumulative losses of at least $1.2 trillion over the period. But this has not affected the appetite of the volatile digital assets, as traders believe the prices will soon rise and stabilize. Now, the cryptocurrency market witnessed one of the worst meltdown last week, with the total market capitalization falling by over 40% to 1.3 trillion US dollars in just about a month. But traders stay put, confident that the market will soon revamp. Now, experts say the meltdown was caused by massive sell-offs spiked by speculations due to the rising inflation in many countries, coupled with a move by some nations, including the United States of America, United Kingdom, Australia, and India, to raise interest rates to tackle rising commodity prices. Now, this story comes when Uganda has just actually, Bank of Uganda just banned transactions, cryptocurrency transactions in Uganda, temporarily banned cryptocurrency transactions in Uganda. And cryptocurrency has lost value by over 50%. Now, that means that if you had 100 million invested in crypto, right now, that value has reduced to 50 million. That's literally what it's saying, you know? And this is happening due to the factors we have already mentioned, inflation and the war in Russia, the increasing prices. These are putting a lot of pressure on governments, and governments are putting high interest rates in order to control this inflation. And so people have been paying out their cryptocurrencies so they can actually move out of the cryptocurrency business before it gets bad, and that has affected the currency as well. But as this report says, we are seeing some people who are still confident crypto will actually rise in price and pick up from the broken pieces. So some people are still holding on to these cryptocurrencies. Now, according to Mr. Rufus Kamau, a Nairobi-based financial markets analyst and researcher, the effects of raising interest rate is that as people reduce their expenditure, they also reduce their investment. Yes? And that cuts across crypto, stocks, and equity markets. Now, this man, Mr. Kamau Rufus, is saying that the effect, if we raise the interest rate of banks, less people are likely to borrow. And if less people are likely to borrow money from the bank, we are going to see less people spending money. If less people are spending money, meaning there's less money being spent, they also reduce on their investments. Because if you don't have money, you cannot invest. Usually, people advise that you invest income, that idle money that you have, that you invest it in something. But we are saying that actually, if the money is not there, if you don't have enough money, the banks are not lending you money because literally the rates are, they're so high, inexplicably high, and you cannot access them. When you access them, you have to pay high interest. So you don't have enough money, you don't have enough investments. You are actually going to invest less, and that cuts across the crypto as well as equity and the stock market. So this is the way the cryptocurrency has also lost value, because less people have money to invest in crypto. As the interest rates are high, the prices of goods are high, everyone wants to use the small money they have to survive the tough time that is being experienced all over the world. Now, moving on, with the price of Bitcoin, which is the largest and most popular cryptocurrency, falling by over 50% in November 2021, crypto traders are now counting cumulative losses of at least 1.2 trillion US dollars over the same period. But this has not affected the appetite of the volatile digital assets, as traders believe prices will rise and stabilize. Now, Timothy Kamau, a Nairobi-based cryptocurrency investor, told one of the papers there that I am not sure how long it will take to resume, but I know eventually the prices will rise again. That's why I have not lost interest. Based on statistics by global cryptocurrency, asset trackers, coin market capitalization, Bitcoin's price rose from about 26,000 US dollars last week on Thursday and is currently trading at just above 30,000. It has been the worst before. It has been worse before and still prices revamped. This is certainly not any different, remarked Mr. Eric Michubu, who is a Bitcoin entrepreneur. The worst affected cryptocurrency was the fairly new Luna, which had been trading at about 116 US dollars, but slumped to 0.0002 US dollars. 116, yes, US dollars to 0.002. That is for Luna right there, a cryptocurrency that is new on the market. And the story develops and keeps coming in there, and we shall be giving you more of that. Now, why we bring you this is for you to be careful how you invest your money. These assets in financial markets like cryptocurrency are very, very volatile. And as an investor, you have to be very careful as you invest in cryptocurrency. I know it was banned in Uganda, but some people still do it because it's not banned elsewhere in the world. So you can always keep transacting your crypto in other parts of the world. But you have to be careful. You have to be aware of what is going on in crypto. And this is what is going on. It has lost value. Yes, it has lost over 50%. But of course, there are people who are in there now, they're saying that is an opportunity because they can now buy crypto at a very cheap price and wait for the prices to shoot up. And when the prices shoot up, they sell and make profit. But still risky because we don't know the future unless you are very, you have a very good financial analyst and advisor who can tell you right now, this is the best thing to invest in. And that's why we are here to give you all that and more. Now, our time is fast spent. We are going to see something about the treasury bond and investing in treasury bills and what they are. When we return with our guest, Mr. Raymond Kayemba, who is a financial analyst from SBG Securities, talking a little bit more on the CIPLA report that was recently released in media. We'll be right back. Stick around.